Oh, that's the doorbell ringing. That's the plumber turning up. That's exciting. Hello, David Udall here. Welcome to another Agonomics, your weekly dose of agriculture and economics courtesy of AHDB. It feels like we've returned to a normal pace of life after a flurry of activity last time out when we published our analysis of farm inheritance tax. If you haven't listened to that episode, then I've got to get a message to you to check it out. It's part of an extensive back catalogue we've put together over the last few months. In this episode, we turn our attention to the world of cereals and oilseeds. The January balance sheets, no less, as we focus on the latest UK supply and demand estimates. I'll be joined by senior analyst Olivia Bonser to talk about the level of usage of imported cereals, wheat and barley stocks and exports. And keep an ear cocked for anything that sounds like a song title, because we're persevering with the weekly mystery musical act. Who could it be? Geez, calm down. I'll tell you at the end. Don't forget to remember to follow and subscribe to this podcast to make sure you don't miss an episode. New shows drop every Wednesday at midday, unless we change our mind at the last minute. And please get in touch. We'd love to hear your words. Comment on any of AHDB's social channels or email us agonomics@ahdb.org.uk and let us know where you're listening, be it Massachusetts or Maidstone. So it's been a busy week of economics from AHDB. There's been a flurry of activity, as we were saying. We had a lot of information released. We've had our dairy outlook that's been released in the last few days. But the big news of the last week was the analysis that we did on the inheritance tax. There's been a lot of reaction to last week's podcast and surrounding areas of our analysis. Ian wrote on LinkedIn that it was an excellent podcast. Thank you, Ian. And Struan also added that one of the points was very important, that regardless of size, you get tax advice on your situation. And on X, there were a lot of reshares of my short video explainer, which was viewed over 23,000 times. And if you listened to the Gen Z podcast 2 or 3 weeks ago, you'd realise that I'm actually not on X, so none of those are me at all. And the Guardian's main environmental reporter, Helena Horton, was among those tweeting about it. So thank you, Helena. Are you listening, Helena? Are you there? Don't know, maybe not. And in the wider media, we had the likes of Farmers Guardian, Farmers Weekly were talking about it. We even made it onto TV with a report on STV. And we also had my dulcet tones gracing the likes of Radio 4's Farming Today programme. So it was a pleasure recording that with Charlotte and Heather. But today we're going to talk about cereals. And I don't think we've actually focused on the cereals market for a while. We kind of had a bit of a review before Christmas, talking about kind of like the year end and where things are going to go, but we haven't focused on the detail. So we're going to talk about numbers, Olivia. We're going to start by talking about the wheat balance sheet, so the supply and demand of wheat domestically. This is across the whole of the UK. Productions, imports, usage, stocks, how it links to the maize market. But just to kick us off, do you want to give us, I suppose, the headlines around what's going on with the wheat supply and demand situation? Because we did speak about it a few months ago. So what's kind of like the big headline changes since we last spoke?
To be honest, we haven't seen huge changes on the usage side of things. So demand, generally, we've kept our estimates fairly in line with where we had them a couple of months ago in November. Obviously, still a really key talking point at the moment when we're talking about the wheat balance is the trade side of things. So imports, we did keep our import figure the same as where we had it in November. And obviously that was a really high level. So at the moment, we're forecasting 2.75 million tonnes of wheat imports, which if you think historically is significantly higher than what we'd usually expect. So for a bit of comparison, the 5-year average is just over 1.85 million tonnes. And that's obviously on the back of that much smaller crop that we had from Harvest 24. And also just the fact that imports were very price competitive for a lot of the season so far. We are expecting that pace to slow down a bit because we have already imported a good chunk of that 2.75 million tonnes. But yeah, that's a really key watch point at the moment. We also, in this January balance sheet, made our first export estimate. So at the moment, we're forecasting 175,000 tonnes of exports, which is significantly lower than a sort of standard year, if you like. So on average, we've exported about 750,000 tonnes previously, but we're just not competitive on the global markets at the moment. And so basically what that's meaning for our wheat balance is that it's much tighter than usual, but actually once we've taken into account those lesser exports, we're expecting to end up with quite heavy stocks come the end of the season.
And that's the bit that it kind of surprises me looking at the balance sheet overall, is that we've got obviously, a reduction in total supply year on year. So thinking about the stocks that we've brought in, the production as well as the imports, it is lower year on year because obviously that reduction in production that we had. But it seems to me, if we look at the numbers, so we're estimating about 2.7 million tonnes of end season stocks. That is still a good 700,000 tonnes above where we'd normally be, and also what we need. There isn't necessarily the need for the domestic markets to have that much stock, and farmer selling has been relatively slow for a period, which I think is for a number of factors. It's obviously, I think we mentioned before, there's the smaller crop, but also markets have been pretty sluggish as we've gone through the winter. I mean, realistically, we've kind of just bobbed either side of around that kind of £190 mark on futures pretty much for 3 or 4 months now. So there hasn't been any great sort of price incentive for anyone to do anything. So I think that's the thing on the sort of the total face of the balance sheet. The thing that I suppose concerns me a little bit for supply and demand towards the end of the season is that there is still a decent amount of wheat still in the system to be used. The demand isn't huge picking up because we've moved to imported and moved to other commodities. And again, we'll talk about that in a minute. But I guess that stock figure at the end, is that going to stay on farm or is that going to come off farm? And if it comes off farm and start coming out into the market, and like you say, we do need to export because there isn't enough domestic demand, well, we've either got to price competitively into domestic demand to displace other crops that are coming in, or we've got to price competitively into exports. So that stock figure sort of lingering around is a bit of a existential threat, I think, to the end of season prices, assuming that from a global perspective, nothing else kicks off.
Yeah, definitely. So I think it is a bit of a concern that we've got those heavy stocks at the end of the season, but ultimately at the moment, we're not pricing at parity to Paris prices, for example. So really, if we wanted to be exporting more, it would mean our price coming down quite a bit to sort of meet that. I think we've especially seen some quite interesting changes in terms of basis within the UK. So we've seen quite a surplus of grain in the southeast, especially at the moment, because of not being able to export and a lot of those exports going out from that south coast, for example. And so because of that, there's quite a big price difference if you're selling from farm down south than further north, for example. So I think it's definitely, if you're a farmer, important to kind of keep in touch with your farm trader and just make sure you know what's going on that side of things as well. And yeah, just monitor the sort of domestic premiums and our relationship to that continent and so on.
So if we look at them in a bit more detail at the numbers, something that stood out to me from a wheat perspective, but also from a maize perspective within the numbers as well, because obviously within these balance sheets, to explain for those that haven't looked at them before, we produce supply and demand statistics for wheat, barley, maize. We're not talking forage maize, we're talking grain maize here, as well as oats. And obviously from a maize perspective, we import significant volumes of maize. So it's basically looking at the imported usage and where it goes. And it seems to me as if there's been a bit of a switch in human and industrial consumption, mainly on the industrial side, really, from wheat to maize since we last did these estimates.
Yes, you're right. So you can see a sort of drop in that human industrial consumption on the wheat side. And like you say, it's not really to do with the flour milling side. That's been pretty stable, steady this season to date. And we're not expecting much change to that. But actually, on the bioethanol and starch side of things, we are expecting a switch from wheat to maize. Obviously, a couple of months ago, we did already allow for that slightly bigger maize usage figure. However, actually, it's possibly continued on further than we previously expected it to, probably because of a couple of things. So firstly, to do with a lot of forward buying. So even though maize actually isn't pricing that competitively at the moment for import, a lot of it was brought forward, and so it's still kind of being processed. But also, we've got that ongoing concern about the status of domestic wheat under the RED 2 initiative. I think that's possibly pushing maize usage up a little bit more as well because of that concern. So where possible, if they can use maize and they've got that assurance that they're going to be okay to use that throughout the rest of the season, then obviously that's what they're going to do in that situation. So because of that, yeah, we've had a slight shift for a bit more onto the maize side of things and a bit taken off the wheat side.
So let's just talk about some of the numbers there, just to, I suppose, clarify that for people. So from a maize perspective, we're forecasting we're going to import just under 2.7 million tonnes of grain maize into the UK this year, which is a significant amount. And of that, we can use 1.1 million tonnes for human and industrial purposes and 1.4 million tonnes for animal feed. And both of those numbers, that 1.1 and 1.4, are historically at the top end of what we used. So we're definitely kind of maxing out maize usage here. And it's interesting, actually, because recently I gave a lecture at Nottingham University to some of their master's students who were specifically looking at animal feed. And we were talking about just exactly that, about the transferring of one commodity to another due to price differentials and how it changes rations and formulas. So it's interesting to see it happening in real life. If anyone has children and knows Bluey, would be knowing that's a great phrase that gets used a lot in that, in real life. Anyway, so from a wheat perspective, what we're basically saying is we've got a reduction in supply. There's a sort of tempering of demand slightly, even though some of the demand figures are still pretty strong. You know, exports aren't doing anything, but we're still having that stock at the end. So I still think that's a bit of a risk going forwards, that we have that overall stock that's sitting there. Right, so we're going to close the first half of the podcast there. Don't worry, it's not a tragedy. We are going to be coming back after this short break when we get the latest in the markets elsewhere, and we're going to be focusing on the barley market domestically and just talking about some of the bigger, wider global drivers of things at the moment.
Hi, I'm Helen Plant, Senior Analyst at AHDB, with a look at grain and oilseed markets for the week commencing the 3rd of February. In recent weeks, wheat prices have drifted sideways, while rapeseed prices have retreated. Crop worries, which focused on low temperatures for US winter wheat crops and continued dry weather for maize and soybean crops in Argentina, have been offset by worries about global demand for grains and oilseeds. In particular, markets had been waiting to see if the new US president would change trade policy as promised during his election campaign. The president announced higher tariffs on imports from Canada, Mexico and China over the weekend and suggested more tariffs could follow for the EU and others. This pressured prices. However, with talks already underway, markets remain uncertain. And US trade policy, along with weather conditions in North and South America, is likely to remain a key factor for grain and oilseed markets in the weeks to come. To stay up to date with the latest data and analysis across arable, red meat and dairy markets, head to ahdb.org.uk and click on Markets and Prices.
Pork.
British pork. Pork is sticky. Pork is spicy. Pork is air-fried, slow-cooked, baked. Pork is high in protein, low on cost. Pork is sauce around your chops. Pork is not just Sundays. Pork is midweek. Every week. This is British pork. But not as you know it. Pork is...
We are staying alive in the second half of Agronomics, and we're here with our senior analyst for cereals and oilseeds, Olivia Bonser, talking about our official UK cereal and supply and demand estimates, the core statistics for how much wheat and barley and maize and oats we have in the country, where it goes and what it's used for. We've reviewed the wheat side of things, and now we're going to focus on the barley numbers. So let's talk about that, Olivia, in terms of that bigger picture of barley. Is there anything significant that's changed since the last time we looked at these numbers?
To be honest, it's not too dissimilar from the wheat situation, whereby we haven't seen major changes to the demand side of things. We've shaved a little bit more off human industrial, which is obviously the brewing, malting and distilling side of things, which we know is quite steady this season. We're seeing a little bit of a downturn on that side of things. But otherwise, not huge changes, only 40,000 tonnes difference from those November figures. We also have upped the import figure. So we've now pegged imports at 175,000 tonnes because we saw sort of a quicker than expected pace over the last few months. So that has increased slightly. But equally, we obviously also got the final DEFRA UK estimates before Christmas. So with that in there, we've actually seen that our availability slightly revised down from where we were in November. We've obviously then also made our first export estimate. So at the moment, we've pegged the exports at 500,000 tonnes, which again, similarly to wheat, is well below the sort of average level that we would expect in a normal year, let's say. But actually, when we sort of consider the balance, so again, very much like wheat, the balance is quite a lot tighter than the 5-year average. But once we take into account the much slower export pace, we're expecting to have quite a significantly heavier ending stocks as well. So it's a very similar picture for the two grains, but it's more the trade side of things that we've seen a bit of a switch in than the usage side.
And that's surprising for barley, because barley in historical terms in the balance sheet and as a market has always been very good at self-regulating in that sense, that it has been able to use that export market to get rid of the surplus. So, I'm quite surprised that there's that slow pace of exports and that there's that significant level of stocks that are placed in there. I mean, we're putting stocks at just over 1.5 million tonnes of barley, whereas, realistically, we only need 800,000 tonnes of barley or so to be able to kind of survive from one season to the next. And the critical thing there, obviously, from a malting perspective, is you need extra stocks to get through the harvest period, further than just the new barley coming online, because you want to make sure you can understand the relative parameters of it to malt it correctly. So there's always a bit of extra fat built in the system for the barley stocks in that sense, just to cover you. And you can't just move barley and animal feed rations. So for pigs, you can't just move from old crop to new crop immediately, because pigs are very fickle with these things, surprisingly. You've got to kind of like merge them to make sure that they, we don't upset the pigs' tummies, basically. So it's quite surprising from a barley perspective to see that there's that level of stocks there. You would expect that would move through. And maybe, this is obviously the estimates we make as of today. Market situations very much change rapidly, and we're heading into that period where markets really start to change. Cereal markets really are a bit kind of dull through the winter, aren't they? Especially December, January, because everything goes into dormancy. So it will be interesting to see how that market now shapes up and changes as we start going through the spring, because that's when the real interesting stuff starts to happen. So is there anything, Olivia, from your perspective, that's on a global sense, on a European sense, what's the focus of the markets now as we're heading through winter, coming out of it soon, I hope, and then being able to move into something where there could be a bit more volatility in markets?
Yeah, so like you say, it's been quite steady over the last sort of few months. Prices have moved quite sideways. We haven't seen great volatility. And I think it's quite interesting because as a general picture, total grain supply and demand globally is actually quite tight this year. And demand is sort of outweighing production by quite a significant amount. So we would expect much tighter stocks at the end of the year. And I think because of that, you would expect markets to be a bit more reactive than maybe what they have been recently. But I think why we haven't seen that is because sort of the ongoing doubts over economic growth and global GDP. Specifically, if we look at China, for example, the sort of big question marks over what we're going to see from Chinese demand over the next couple of years. And I think that's really limiting any sort of price reaction, any bullish price reaction at the moment. And also those South American crops. So even though it's still quite early and some of the crops still being planted, because we're expecting those big crops, it's limiting how far prices can rise as such. But I think other than that, probably the main things to watch are kind of trade disputes. So whether we see any change in policy in the US, for example, with Donald Trump and his presidency. And also in the Black Sea, for example, there's a bit of concern over sort of exports and what we're going to see coming out of Russia come harvest. So I would say they're probably the key things at the moment. But like you say, there's not great volatility in markets. And we're not probably expecting that for a few weeks yet.
Sorry for the pause there, Olivia. I just had an interruption from my plumber who just wandered upstairs to drain the radiator without me realising, even though I just told the wife, give me 20 minutes. But obviously that instruction didn't go through. Yeah, I mean, I think you're right. We're heading into that kind of volatile period as ever with cereal markets. And I guess this is the thing that, from a farmer perspective, domestically, it will be interesting to see the farmer reaction to markets, because from what that balance sheet is showing, both from a wheat perspective but also from a barley perspective, there is an expectation that there will be stocks at the end of the season, and there is no commercial reason to hold stock at the end of the season at the moment. So this is, we're likely to see this is farmer held stock that's currently sitting there. So what's that farmer reaction going to be? And the question really is, if there is a global market issue, because that's what we need, there isn't any reason domestically, given that balance sheet, for the market to suddenly start moving up, because we have supply. So it isn't as if there's anything tight. There has to be a, global market issue to push that market firmer. It will be if we see that and the domestic market starts moving up, farmers then start selling into that, and our relationship to that global change may be impacted by it. So therefore, if the global market's going up, domestic farmers start selling because they think this is the opportunity to take. I've got extra stock that I've not sold yet. Let's get it out of farm. And that's the point where actually it may dampen the potential reaction we see domestically, because we've got the volume on farm that can come out. And there is only one place it can go. It's either got to make its way competitively into domestic rations, so it's got to be priced competitively against imported products coming in, specifically maize and animal feed and industrial usage, or it's got to find an export market. And it might change that relationship that we've got with our European and global market competitors. So rather than being sort of competitively priced with them to make sure that we don't do anything, we'd have to be uncompetitively priced and move lower. And therefore we may not see the full gains of those global market shifts up, purely because we've got that stock, that farmer selling, that would come out. And it might only happen in periods. It might not be consistent through the year, but it's definitely going to be, it's one of those things to be conscious of from a farmer perspective. And this is why the value of the balance sheets comes in, because it gives you that bigger picture to think, right, there is stock there, there is a volume of stock there. I have to sell, because ultimately as a farmer, they're long holders, they always have to sell at some point. And how do they then do that and manage that as the global market changes? So it will be an interesting period, and one to, I think, to have you in your back of your mind from a cereal farmer, thinking when you're making those selling decisions, when's the best timing to do it? That's going to be the challenge. Olivia, thank you for taking us through the balance sheets. There's definitely some detail there. Again, all of that information, as ever, is available on the AHDB website. We reported it in our grain market daily as well recently, so look out for that. And if you've got any questions around the specifics, then please do let us know, and we can geek out on cereal market data. For those who were listening intently, we didn't want to go with the obvious ones, so we went with the more subtle ones, but there was a couple of obvious ones in there of song titles. This week it was the Bee Gees. Everyone loves the Bee Gees, don't they? Surely every wedding in this country has had the Bee Gees on at some point. Surely. Next week, we're going to be focusing on our beef and lamb and dairy outlooks, so getting some of the sort of bigger vision of what to expect in those markets as well for the next 12 months or so. On that note, I'm going to go and check on my plumber, who came back a minute ago to drain my radiator, which is hissing aggressively behind me. So as long as nothing explodes, we'll be back next week.